All right, everybody. Welcome to a live edition of Ask an Expert. This is normally something IEA does with its members on the platform, but we decided today, why not just do it live? So let me do some housekeeping real quick. All right. Now, what is Ask an Expert?
Real quick.
Yeah.
Real quick. Look to your left. That's the camera.
I know. No, I'm not.
Okay.
Yeah. Got the computer set up.
Yeah. All right.
All right. No, appreciate it though. So what we're doing is we're doing a series. It's called Ask an Expert. We normally do this inside of the Investing Education Academy platform. That was my pen. So we decided for the month of June, which this is this the one for June or is this one for July? No, it's July.
This is for July. Yeah.
Yeah, so I typed it wrong. This will be the July edition. We decided to answer some of our community members' questions live on our Facebook Live, and people get to hear it on our podcast too. So we had members from our community pre-ask us questions inside the platform, and some people asked us questions from our Facebook group. So we're going to be answering them live for you tonight. And if you are tuning in and you're like, you know what, I have questions as well, feel free to ask your questions, and as we can, we will answer them live like we normally would do inside of our community. So this is your opportunity. Share this live with some friends. Think about what questions have you been wanting to ask us, and also if there's anything with your portfolio you've been thinking about, like, you know what, if I had a little more guidance in this area, I probably would feel more comfortable. We are not giving direct advice to anyone, but we are saying, as much as we can answer, we will, but we always suggest do your own research. Make sure that what we're saying, we only can say but so much without knowing you personally or knowing your portfolio intimately, but we'll give you an overview of what we think as it relates to the market today. So if you have questions, ask your questions and we'll be happy to answer it. Leon, if you can tell them, like, I guess some of the topics we've covered, we'll ask an expert while I do a little bit of housekeeping.
Oh yeah. So we've covered what are they called? Real estate. Was it trusts? Is it real estate trusts, Brent?
Mm-hmm. Yeah, real estate. Just trust.
Just trust. Yeah, trust. Mm-hmm. And inside trust, you can have real estate. You can have a lot of things inside trust. So we've had lawyers that are part of the membership community actually come on and talk about that aspect of trust.
Yeah, and we did stock. Do what's called a REIT. We did the REITs. So those are real estate investment trusts. We did discuss that, but we also have talked about the estate planning trust as well.
That's what estate planning trust is what I was thinking about. But yes, we've also done real estate trust as well. We've done we've covered asking expert as far as options. We've covered asking expert covering trader psychology. We've covered taxes, taxes based on stocks and investing. So we've covered a whole, and we've done we've been doing this ever since we started in April, May 2020. So we have a huge library over a year and a half worth of Ask Experts that our community has access to. And it's really good and valuable information because, as Brent always says, a lot of times some of the people that we have on, like some of the attorneys we've had on to discuss things like give it to me, Brent, again. What is living trusts?
Yeah, yeah.
I can't.
Living wills, irrevocable trust. We have
So those type of resources and individuals and attorneys cost hundreds, if not thousands of dollars per day, per hour, what have you. And we've had them on for free for our community. So for all of our community that's either new or hasn't taken advantage of it yet, definitely just do a search inside IEA membership platform for Ask an Expert, and you get a whole year and a half worth of tons of really useful content.
Yeah, actually, one of the ones we did on real estate was well received to the point where we're going to be adding a real estate investing division to Investing Education Academy. So if you are interested in investing in real estate, but you've been thinking, I would love to work with or join the IEA platform, but I'm really more into real estate, it's coming. So
and the cool thing that came out of that one is that one of our members actually became a client of the expert we had on. So we actually helped our member eventually purchase a home, and the individual we had on who's going to be taking over or actually starting the real estate aspect of IEA actually had a new client. So it was a win-win all the way around, which was really cool. So
and
today
they're in their house now. They are in their house. Everything worked out great. So
transaction when they bought the home. So today what we're doing is we're just taking kind of a really light version, because typically Ask an Expert runs about 40 minutes to an hour, and these lives are not that long. We've definitely tried to scale it down from being that long. So we're just gonna so what we did was we pulled a few questions from our community, the membership community. We got a few from the Facebook group as well. And so we're gonna just we're gonna present these questions live and then answer them from our perspective, my perspective, Brent's perspective. Again, like Brent said, everything we're saying here is not advice. We're not quote unquote experts. This is just our opinion on these particular topics.
Yeah, and when it says like, oh, but you guys aren't saying you're experts, but the topic is called Ask an Expert, is because, you know, as it relates to investing, you know, even if we're expert with our own portfolio, one of the things, and it's just a philosophy Leon and I have, we always can grow. You know, we always can learn something new. There's always a way to be better. So I feel like when people sometimes, I mean, this is for me, when people claim to be experts, it can often be indicative with them no longer wanting to learn new stuff. So that's why we just refrain from really calling ourselves experts.
Yeah.
In case you're wondering.
Yeah, true. I mean, the perspectives we give as far as our answers are from our perspective. That's our expertise and knowledge in that particular subject. But yeah, I mean, again, we don't ever claim to be experts. We don't ever claim to be gurus, but we do have definitely high confidence in our opinion and our our ability to counsel others when it comes to investing and definitely the stock market. So
yeah, and we had a question come in already, and the question was, Phaedra wants to know if she can learn more about trust. Yes, actually, I was one of our very early Ask an Expert sessions, and I'm of the mindset to say it's probably time to bring the estate planning attorney back to do another session, because our membership has almost doubled since then. So there are a lot of people in the community that didn't have that opportunity to ask the estate planning expert, you know, really what to do as it relates to planning. So we might want to double back on that one. But yes, you can go into the platform and find the one on estate planning. But I'm definitely inclined to say we're gonna run that one back. And she's a Panther as well. So not only did she come on to Ask an Expert, she's part of the IEA community. She joined, she became a member, which shows that it's not just like, you know, people that don't know anything about money. It's professionals that are joining the IEA platform.
yeah, Phaedra. What I'll do is actually it's a good point, and that's actually kind of a good kind of segue into the content. We've like I said, we've been doing this since April 20th of last year, and we have a ton of content. We do this live every week, and we do these Ask It Experts every month. So we have almost 2 years worth of content, and a lot of members are actually really new in the last 6 to 8 months. So a lot of members may not even know this content actually exists inside IEA. So I think what we'll do is actually kind of resurface a lot of the older content and push that out to members so they can go back and review something we've done almost over a year ago. Yep. So that's kind of a good point, Phaedra. We'll make a point to actually bring some of that content back to the forefront on the platform.
Yep. And if any members are out there who are in the platform, like paid members of IEA, if you go to the IEA TV section inside the platform under topics, you'll see IEA TV. You can click on that, and that's pretty much a library of most of our live discussions where you can find information you might be looking for.
Yeah, and when you do that, when you click in there in IEA TV at the top, you'll see a search bar. So you can actually search just within IEA TV itself. So if you're looking for that particular trust one or any other topic that you're interested in, you can just search within that, and it'll search just the IEA TV podcast we've done.
Yeah, and Monteith, if you have any questions about estate planning as well, let us know, and we'll be happy to really direct you in any area that we can. But I also want to, before we dive into the questions, and Leon, you can cue them up while I say this piece, is we have to welcome our new members. We have a lot of new members, and we're happy for all of our members. So we also want to announce that we have three new Panthers in the last 2 weeks. So we are fastly approaching, I don't know where we are with the numbers, honestly. I think it's like 11 or 12.
We're now at 13 or 14 Panthers.
Okay, so if we're at 13 or 14 Panthers, as you all know, when we hit 15, are you serious? Okay, so that's actually pretty exciting. When we hit 15 IEA Panthers, that's the group where we actually invest together. We, it's not just a platform of education, but
hey,
we
remember, look to your left. Yeah, it looks odd you looking at the computer. Yeah.
No, because it's cool. So full disclosure, I talked to this guy who's a videographer, and he was like, "You got to try to change your camera setup." And so I was like, "All right, I'll try it." But from
the viewer standpoint, it looks odd that you're not looking at who you're talking to. At least that's what it looks.
Do y'all want me to look here, or do y'all want me to look here? Here.
I say look at the camera.
We're being honest, right? We're trying to figure it out.
No doubt.
Okay. So for those of you, if we're at 12 or 13 Panthers, we're closing the Panther group down at 15. So that means we only have 3 slots left. When we close down the Panthers, it's currently $5,000 annually. And when we open that back up, it's going to be $10,000 per Panther. So if you are serious about being a Panther, we had one join today, like minutes ago, and we had one last Monday, and somebody who joined last week. So if you're serious again about being a Panther, we have about 3 slots left. Once we get to 3, we're closing down the group the group will still function, but we're not bringing on any new members for a couple months. And when we do start bringing new members in, it's going to be $10,000 per person. So, if that's what you want to do it. All right, Leon, Monty said you need to get closer to the camera.
All right.
And then Phaedra and Monteith told me I need to look at the camera.
There you go. Thank you.
Hey, we listen to our people.
And I need to get closer to the cammer. All right, yeah. I'm
with so, we're flexible. So, this whole thing. Honestly, IEA is a year old. I want to just touch on that for a minute. We're running 50% off 2 of our membership platforms, and that's Community and Insider. This will be the last time that we run a 50% off anything. So if you've been thinking about it, if you have some friends, if you have some family, and you think they should become IEA members, now is the time. We're going to be running this deal for probably like a week or so. As far as I can say, I'm not even going to speak for Leon. I'm saying for me, as far as I'm concerned, this is the last time we will run a 50% off membership deal ever. Like maybe something else in the future, but it won't be this high. It won't be 50% off. So with that being said, you want to jump into the questions, please?
Yeah. So all right. So I'm gonna start. I'm gonna read the questions and then we'll both kind of answer them. So the first one is from, and I'm apologize for if I'm saying your name wrong. I'm gonna try. The way I see it is Kun Lee. Don't know if that's pronounced properly, but came from the Facebook group. His question is, what are your thoughts on Baidu? I read it's the Chinese version of Google, but it hasn't been winning like Alphabet, which is Google. Should I buy and hold or sit and wait till the dust settles from the government crackdown going on there? And it means the government crackdown on tech stocks in China going on right now. So first off, Baidu is not like Google. Baidu is like Amazon. Baidu's business model is literally an exact mirror of Amazon. I don't know if a lot of people know, but Amazon makes all their profits from their service called AWS, which is Amazon Web Services, and Baidu also, which is their cloud services. Baidu also has a cloud services business as well, a very big cloud services business that's growing. So they've almost mirrored their business one for one to what Amazon does. So Baidu is not like Google. They're more like Amazon. And with that, so as far as buying them, wait, you know what? I take that back. Sorry. I'm thinking of Alibaba. Baidu is not Alibaba. I take it back. Yes. Baidu is right, Brent?
Yeah, when you said it, I was like,
yeah.
I was start thinking Mercado Libre, because it's all in that group. It's Mercado Libre, Alibaba, Amazon, and then the one in Africa.
I own them. Yeah, the Amazon of Africa. Yes.
Yeah.
So I take that back. Kunli, yes. Baidu is similar to Google. I was thinking of Alibaba. To answer your question, as far as buying Chinese stocks listed in the U.S., currently I am not doing it because the crackdown in China is for real. Like the government there, they're really. I mean, they basically shut down all of crypto essentially, and now I mean they just totally decimate. Like anybody that bought the Didi IPO last week, I know people that bought it and they're already down 20, 30, 40%. And it hasn't even really been out a week yet. And that's because this crackdown came came a little after the IPO. So I'm avoiding any Asian stocks right now just for that reason, because the Asian government is really cracking down. And actually, just real quick, my question was like, why do they care about Baidu? Like they're quote unquote the Uber of China. And I saw a thing today where a lady, she explained why. She said basically because a lot of government. So Didi has a board member who's some U.S. official, some U.S. either official, wasn't official, high-ranking tech executive, something really high up in the U.S. either government or business. And a lot of Chinese government officials use Didi. And just like Uber, all that data is saved. So Didi knows where people are, where they're going, where they've been, what their trips are. And the reason they're cracking down on Didi is because because of this individual that sits on Didi's board, that they said the government is very worried that this individual will have access to all this data where the government officials are going, traveling around China in the Didi cars, and relay that back to the U.S. government. Is that possible? Probably, but it's probably really unlikely. But the Chinese government, they don't care. So they said that's one reason why Didi, which is again the Uber of China, why they're really, really cracking down on Didi, because they don't want this information they feel getting to the U.S. via these particular members that sit on the board that have U.S. ties. So back to your question about Baidu, I'm avoiding Chinese stocks right now just because of the crackdown that's going on in Asia. If you want to buy now, I will say also, these stocks are down huge. I mean, they're down anywhere from 20 to 30, 40, 50%. So, we always say here at IEA, long term, 3, 5, 10 years, if you're willing to, kind of buy low and then understand they may go lower, but you can essentially get a good discount now, it might be worth taking a shot. But me personally, I'm avoiding all Asian stocks right now, just till China government gets this crackdown out of their system.
Yeah, well, I'm reading up on it, and it looks like they're located in Beijing, but the company is really heavy in cloud computing, similar to Google, which is what you said. Yes. What I was checking to see if they're trading as a ADR in the US, which is an American depository receipt. So I'm looking to see, I'm too, let me echo what Leon said. I have started to just watch the government in China to see what is going to happen with many of these ADRs and the such, because governmental risk is something that you really can't account for, because once it happens, it normally happens pretty harshly and swiftly. So governmental risk is a very real thing when investing in the stock market. So I'm deciding, what does ADR mean? Jessica, ADR is American Depository Receipt. There are certain stocks that trade on the US stock exchanges as if they are US-based companies. However, they're foreign companies with the front face interface for American investors or US-based investors to buy and sell without having any kind of hiccup. So American Depository Receipts, most of the time, you won't even know it's an ADR.
Nor care. I mean, it doesn't. Yeah. Being an ADR doesn't change the way it's stocked. ADRs trade just like stocks. Similar thing.
Yeah. But the thing is, when it is ADR, it lets you know that it's a foreign-based business, which means the business the functions could be different, and also the business culture could be different than what a U.S. company would be. So sometimes knowing it's an ADR is important because it helps you understand the behavior of the company that issues the stock. But as Leon said, it being an ADR, really, you most of the time you don't know. You have no clue. And
yeah, that's kind of a good point, because if you knew, so what happened with Didi, another thing, just kind of going back to Didi. So Didi was warned by the Chinese government prior to the IPO to not do it, right? Because the government was saying, look, we have all the stuff coming, the things we want you to do prior to the IPO, freeze your IPO. Didi ignored them, right, and went ahead with the IPO in the US. And now investors that bought into that IPO are now being punished kind of harshly because they bought that IPO and the stock is down. You know, if you got it near the highs, you know, it's down anywhere. I started down almost 50%. So, so as Brent said, governmental risk. But had you known that was an ADR, if you know it's an ADR, had you known it was a foreign company, you would have may have said, okay, hey, how do things actually work in that country as far as regulation? You know, how as far as reporting. Another thing about Chinese stocks and that they're notorious for is that they're so you know in the U.S. everything is really really tightly regulated as far as reporting earnings, sales, things like that. What they call the fundamentals. In Asia, they're not so strict on that, and so a lot of times companies that list here, you don't really know if their books are truthful or not, right? So that's another reason. Again, if you see an ADR, you may want to say, okay, what country are they in, and how does that country, you know, how tight are the regulations around you know reporting fundamentals and things like that out from the company? Because again, Chinese companies are notorious for reporting either inaccurate or just
what they want
false.
you to know is a lot of it is what you want you to know.
Yeah, but what they want you to know can be a straight out lie, or it just can be not giving the full truth. So knowing if it's an ADR or not is it's a very good point. If you see it's an ADR, you definitely want to investigate what country it's coming from and maybe kind of the rules around that country's reporting habits.
Yeah. Okay. Cool. What's the next question, Lee?
All right.
And
So
again, I'm sorry,
Mhm.
real quick. If anybody's watching and you do have additional questions, you know, ask them. If you want to share this with your friends, family, share it. We give you these opportunities to ask people. We charge quite a bit if you want to meet with us individually, or if you want to meet with us as a group. This is an opportunity to ask us whatever you've been curious about. So I just hope you take advantage of it. Okay, go ahead, Lee.
Yep. So this one's from Lynette, IEA Insider Lynette. So her question is it true that between 9 a.m. and 10 a.m. is the best time to buy stocks? Brent, I'll let you answer first.
Yeah, no. I can say no. So 9 a.m., 10 a.m. So this is actually, so if you all don't know my history, I was a stockbroker coming out of college. I wrote tickets. I wrote the stock trading tickets and I was in the pit. And I can tell you, I was there at 9 a.m. when the market would open. And number one, the markets are different than what they used to be. So let me start there. I was licensed in 2001. So we are definitely 20 years later. So most of the time when the market first opens, there are a lot of trades that were put in overnight that are just getting executed. And you don't know directionally which way the market's going to go. If you're looking at a quote unquote best time to get into the market, I would say not necessarily, it's best, depends on how you invest too. So Leon and I cannot answer that in a blanketed way, because if you're a short seller, you want the market down. You want to see the market becoming depressed. But if you're long position, meaning a year or more, you want to see the market climbing. So that's going to determine on what you consider to be best time in the market. So anyway, with that being said, one of the times where normally, I'm gonna answer this as if I were a long-term investor. What did you say, Lee?
Nah, keep going.
Okay, so when you are looking at the buying stock, normally about 3 o'clock is a really good time to buy, because there's what's called profit taking in the marketplace, and people start to pull out a little bit of money for profits before the market closes. So about 3 o'clock on, you can see some profit taking. But again, I want to be very clear. The market is ever changing, and the market is changing even now, where it is after hours trading is more active than it's ever been. You still have mutual funds, and mutual funds don't transact business until the close of business that day. So that's pretty much after hours marketplace, where you're getting institutional money moving the market up or down. But if you were a long-term investor, by and large, you normally see the market dip about 3 o'clock.
Yeah. So, and my answer to that is, and sorry to step away real quick, you know, we're still at home, things happen. So the 9 a.m. 10 a.m. thing generally, from my perspective, means nothing, right? So, you know, we're long-term investors. We say 3 to 5 years minimum. If I buy at 9 o'clock, and this is again my perspective, like Brent said, if you're a day trader, if you're a short seller, it may be different for you. I'm a long-term investor. If I buy at 9 o'clock, 3 o'clock, 2, it doesn't matter, because I'm holding for 3, 5, 10 years. So, but also the question is the best time. There's no data around quote unquote best time. As Brent said, we can't answer that specifically for your situation because we don't know what type of investor you are, what type of trader you are. But as far as getting a return on your money over whatever time frame it is, there's nothing supporting any particular time to buy. So for me, the answer is between 9 a.m. 10 a.m. the best time to buy? Absolutely not. I mean, anytime you want to buy, as long as you have the money to make the purchase, is fine.
Yeah, and we got a question that's not on our list. 2 questions that came in. All right, so one is from Phaedra. Is Tesla still a hold? Yes. For me, Tesla's going nowhere. So Tesla's going nowhere in the next few years. I mean, it's no competition coming out. Especially, honestly, Tesla had a boost with everything happening from a governmental standpoint in China, because those major EV players, they were pretty much all from China, and they were almost all ADRs. So China, I mean, what's going on governmentally in China is probably a boost to Tesla, if nothing else. But, even with that being said, if it weren't happening, I still wouldn't sell Tesla.
Yeah, no, Tesla, I mean, the future is electric vehicles. And Tesla right now in the world is by far the leading. Xpeng and Li and NIO in China are also huge. They're doing well too. They reported, a few of them reported their sales increases, I think, last month, and they're all up like 300 or 400%. I think either quarter over quarter or month over month. So the Asian EV makers are booming, right? But Tesla's still the leader. So they're, eventually competition is going to come. Tesla's going to, kind of come back to earth. But
no, it's not coming back to earth. Then it's going to be SpaceX.
well, yeah, right. Then that literally is going to be out space, right?
Yeah.
The Tesla. So I think kind of goes to Phaedra's question is Tesla has not been booming like it was last year, and really no stock has, right? Like the market is not what it was last year. What happened last year when the market was, I think, up like 80% from the lows, that was very, as we said last year, that was a very abnormal market. So we can't look at last year and how we all made just a killing last year and expect it to happen going forward. Tesla is a solid stock. They're the leading EV maker. And also remember that Elon Musk also owns SpaceX, which is soon to go public in the next probably couple of years. He also owns a company called Starlink. Now, I don't know if a lot of people know about that. They're a company that actually they beam internet from satellites down to areas around the planet they can't get either like Wi-Fi or even lay cables there. And I think I heard that may go public actually before SpaceX. So and of course, when a lot of these companies that have like sister ownerships or relationships, when they come public, if Starlink came out and did well, you could probably see Tesla doing well as well, just because they're linked, correlated in some ways. So yeah, no, Tesla's fine. I own Tesla. I would buy more on dips. I have bought more on dips, and yeah, it's most definitely a hold. And if you don't own it, take a look at it.
Yeah, and Tesla's been bouncing around like 530 and 700 since pretty much November of last year. Mm-hmm. It's going to keep bouncing. Tesla has pretty wild swings in that price range, but I'm still buying more. And I'm riding, I hate to say it this way, but I'm riding with Tesla to the moon, right? So. And
also, you got to remember, we're in a very weird market, right? We're coming out of the pandemic. We're dealing in a market that there's a shortage of. I mean, I just saw today that the economy is outpacing supply. So they said the best place to look is I think patio furniture, and they said the reason to look at that is because there's so many orders for patio furniture. The orders go out to like February of next year because there's not enough inventory to fill this need for patio furniture. So that's just an example of how the economy is on fire. Somebody like Tesla, which again grew ridiculous last year, is most of the market right now, especially these tech stocks, from February up to recently, we're kind of going sideways. The NASDAQ, which tracks most tech stocks, finally reached new highs. So a lot of these tech stocks are now coming out of this low. So over the next couple months, if things kind of go the way they're going, we should see tech stocks actually start to move higher. But tech stocks have been in a range really since February. So we may see more of that. And last point, rates. Rates are driving tech. Rates are down considerably the last week or two. And I say rates, I mean interest rates. And that's why you've seen the NASDAQ really tick up and make new highs, because high interest rates negatively affect, high interest rates.
Inverse relationship.
Yeah, high interest rates negatively affect tech stocks. rates are dropping, so tech stocks are starting to rise.
Yeah, and Phaedra, I would just say on the closing, I also like Ford in the EV marketplace. Ford stock is in the teens, I believe, still, and they're coming out with some very interesting vehicles from an electric vehicle standpoint, and from a U.S. standpoint, there are going to be a lot of people looking to see them as a leader or emerge as a leader in the EV market space. Now, I don't think they're going to go on a tear anytime soon, but they're definitely coming out with vehicles to be noted in the EV marketplace.
And I'll say also GM, Ford and GM are completely doing a complete 180. They're retooling all their factories now to make electric vehicles and batteries. So those are two. Tesla's not the only game in town as far as American companies. You also have Tesla, Ford, and
Toyota.
And GM.
I mean, Toyota's technically not, but Toyota mainly is in like Kentucky. So
yeah, I mean they're an Asian company, but yeah, they build a lot here. All right, so next question is from Kalani. I'm saying your name wrong.
After we answer the one from Kalani, Monteith, we're going to answer your question. All right, go ahead.
Okay, yes. So Kalani is, I believe, he's in Germany. He's an IEA Insider member. So when is the best time to set a stop loss and at what percentage? Again, this kind of goes back to
stop loss for what?
Stop loss on a stock.
Any stock?
Yeah, it's a generic question. Yeah. And I mean, your reaction says that that's one of those questions. Again, we can't really answer it. We can only give generalities. So I don't use stop losses. And what everybody doesn't know, a stop loss is just where you get out the trade, right? So if you get in at $100 and the stock drops $5 and $95, you tell the system to sell your position and take your $5 loss. That's a stop loss because you're stopping your losses. But I don't trade those. So I used to in the past. When I did, I lost more money than I gained because unless you know the volatility of that stock, how much it kind of trades in a range per day, you're just kind of guessing. So if I say, Kalani, it's great to do a 2% stop loss, but that stock typically moves 5% per day, you're going to get stopped out every time. So you really have to understand the stock you're trading and definitely understand its volatility, its ranges for the day to know where to set that stop loss and at what percentage.
Yeah, and I'll absolutely 1000% echo what Leon's saying. This goes into day traders or people who are even swing traders versus long-term traders or long-term investors. So I have to know your style in order to answer that question. And also you have to know your goals when you go into that stock. Is your goal just to hit 10%? Is your goal to get to 20? Is your goal to, stay with this stock for 3 years, no matter what it does? So for us, especially Leon and I, we're of the mindset, we don't care what the stock does. When we pick a stock, we chose it because it had strong fundamentals. We understood the management of the company. It's positioned well in the marketplace, and the market cap looks like it's going to sustain the growth of the company. So we don't, the small day-to-day swings don't matter to us much. Now, for anybody who's putting in a stop loss, just cautionary. Please understand what Leon is saying. That swing of a stock in any given day, like I think it's Tesla, since we just talked about Tesla. Tesla can swing $200 in a day. And I think it's 150, but it can swing pretty wide for what we're used to, in a given day. So if you think, oh, Tesla just swung had a $100 move, and you jump out thinking, okay, the floor is about to fall from under it, that's normal for Tesla. So you can't put in the stop loss because, like Leon said again, it will be triggered all the time. So I only will put in the stop loss, meaning it automatically sells after it hits a certain point number. After I probably saw at least a 30% gain in a given stock, would I even consider a stop loss to lock in that gain? But more than likely, if I bought it because I'm going the distance with it, and I wouldn't do it. But just to give you guys something to work with, until I saw 30% gain in a stock, I wouldn't even worry. I wouldn't even think about it. At least 30%.
Yeah, like I said, for me, I don't use stop losses. So because I'm like Brent said, the day-to-day doesn't really matter to me because I'm long-term.
Hold up, Leon. So next one is Monteith.
Yeah, Monteith.
We told him we would get to this one. So this is a yes or no question, I guess. And I'm gonna say it the way he wrote it. Will you guys ever cover options? So we actually already wrote. Oh, you know, Leon, I'll let you answer that.
Yeah, man. So Monty, we've already. So here's the thing: we have a course done, right? And we've had the course done for at least 4 months. And actually, we're gonna do an Ask an Expert coming up in the next month or two, where I'll be the expert, and then we'll kind of cover options inside the membership platform. So to answer your question, yes, we will. Reason we haven't done it in depth really is because a lot of people who've joined IEA, a lot of members inside IEA are novice and new investors, right? So they're just trying to get their hands wet around, or their feet wet in just investing in the stock market in general. Options is a whole nother beast. It's literally like a whole nother language. It's a huge learning curve. So we didn't really want to thrust that on people that were just really trying to get their feet wet in the stock market. So that's why we haven't gone too deep in it, Montes. But like I said, we have a course done. It's a beginner's course, a very early course. And so we'll have that coming out relatively soon. And then we will be doing an Ask an Expert coming up, where I'll sit in as an expert and answer any options questions. Because just for everybody that wants to know, I've been trading options now for I've been trading stock options for about 8 years. I've been trading futures options for about 5 years. So, and I've had every lump that you can get in options before. So so I can impart my knowledge and help people not make the same mistakes I did when trading options. But yeah, so on my team, yes, we'll be doing that relatively soon.
Okay. And the other part of that was ChargePoint. What are our thoughts on ChargePoint? So for me, again, going back to just the fact that we're in a place where no, I'm not gonna say that. I take that back. Well-positioned EV players, and I would put ChargePoint into the EV marketplace. They're poised to grow. You're talking about an ecosystem. I mean, globally, it's only like 1% of the world population using EV cars, which means it's probably 0.000 something percent of charge stations that have been developed globally for what's coming. And I mean, the US is a very small blip on the screen when you look at the global marketplace. So ChargePoint and the others that have the technology and the ability to scale, I think, are well positioned. ChargePoint has a market cap of about 9 billion, so still on the smaller side for companies, but they're definitely growing. I think in June alone, they had like a 42% growth jump in their value of the stock, but it was also because so many of the stocks in electric vehicle EV marketplace were down so much that it was not easy, but don't get pulled or sucked into a 40% jump in June thinking that's amazing, because most of the people who were in that stock probably were looking at a 60% drop if they were holding it for 6 months or more. So just understand, sometimes the news puts spins on things to make it seem amazing, but I do think ChargePoint is going to be here well into the future.
Yeah, and it goes back down to the point we said before about EVs in general. Like, it's the future, right? I mean, like, when was the last time? I mean, how many people that are investors get a chance to get in on the ground floor of any investment, right? Like, we all buy, Microsoft and Google and Amazon. These things started 20, 30 years ago, even, IBM even longer than that. We weren't there for that, right? But we're on the ground floor of EVs. So ChargePoint, I mean, all of them, ChargePoint, EVgo, I think just went public. And then all the EV car manufacturers, to me, they're all, I mean, again, this is just my perspective. To me, they're all buys on, piecemealing it out. And if you have $1,000, maybe put $200-$300 in each, because we have no idea who's going to win. We know the industry is going to win. We don't have any idea what company's going to win. So being that it's on the ground floor, I'm like, yeah, take a shot. I mean, why not? Again, imagine buying in the gas, in the gas stations, 100 years ago when Exxon and Mobil and all those were just starting to build those out. So yeah, I'm a fan of all the charge station companies.
And Jessica, I'm glad that you are deciding to take a look at some of those stocks that we mentioned. But again, when you do take a look at it, Jessica, I just want to say, make sure it matches what your suitability is, what your goals are for your particular portfolio, and that you understand the investments and the risk associated with them before you dive full in.
Yep. All right. Next question is from Mo. Mo is also an IEA member. So his question is, when are we taxed on trades? if I sell a stock or shares of a stock, but don't take the money out of my investment account, am I still taxed?
Yeah,
Right.
you do that one?
Yeah.
All right. So you're taxed the moment you hit sell only if you're also realizing profit. So if you bought, and to give you an example so people can kind of match up some numbers, if you bought a stock at $100 and you sell it for 90, there is no taxable event because you lost money. But and actually I shouldn't even say it's not a taxable event. Because you could be capturing that loss, which is a whole nother thing. And that was on one of the Ask an Expert specials where we talked about capturing loss. But as far as being taxed on the gains, there is no gain to be taxed. However, if you buy a stock for 100 and you sell it for 200, but you just leave the money in your Robinhood account, you don't pull it out, you don't touch it, you can't feel it, you are taxed at the moment that the sale is transacted. So yes, and you make sure you tell your accountant and you give them the 1099 INT so they can see what you've been doing in your account.
Yep. Yeah. So there's no like hiding from taxes by just keeping it in your brokerage account. Like Brent said, as soon as you hit sell and you made a profit, your account for the whole year, you're still going to be taxed on that come the following, because what's going to happen is your broker is going to send you, like Brent said, the 1099, which is going to show that transaction. So when you report in, your taxes, it's going to be there for them to see. Second and last question is, this is kind of specific, but we can make it a little more general. They're saying, so now that Salesforce has acquired Slack, which stock is better to buy and hold long term? And this is also from Mo. And so I'll make it kind of general. So usually, typically, when a company buys another company, the company that's been acquired, a lot of times their stock will go away. Usually, sometimes the acquirer will acquire 100% of the shares and then retire them, and the stock will go away. Other times, when a company will acquire maybe 80% of the company and maybe leave that 20% or so still out there trading. So it kind of depends on what the structure of the deal is when they're bought, when the company's bought. But for me, typically, in an acquisition standpoint, I'll prefer to buy the company that's doing the acquiring because the company that's being acquired is typically smaller. And again, it depends on the industry, it depends on what you're looking for. But I prefer to buy the bigger company because the one that's being bought is typically be a smaller company, probably have more risk, not have as much profit or sales. They maybe also the reason they're buying, right? If they're buying what they call an acqui-hire, which is just really buying for talent, not necessarily for the business model. That's one thing. If they're buying for technology, not necessarily for revenues and profits, that's another thing. So you also got to see why the company is being bought. So that's why I typically like to buy the company I like to buy or hold the company that's doing the acquiring versus the one that's been acquired.
Yeah, I echo what Leon said. I want to buy the company that's acquiring because it's normally a stronger position. And we just had attorney Beverly Winstead join us. And I know we had some tax questions, and also we talked about capturing losses, and how our gains tax. There's a tax attorney on like on the live now, and she's also a Panther with IEA. So, I suggest anybody who has a tax question and they're also investing, especially if you're in the cryptocurrency marketplace, because there's still a lot of people who think if they sweep it under the rug, it didn't happen. And that is not the case. The IRS is gearing up heavily to go after people who are not claiming the cryptocurrency profits. So please schedule an appointment with attorney Beverly Winstead. You can go to irshelpattorneys.com, schedule an appointment. Yes, that was a free commercial, but we want you all to have resources in this community. So use your resources.
And just on that tax thing. So as we said with the stocks, if you sell your stock and you leave it in your brokerage account, you are still taxed. A lot of people thought the same thing with crypto. They thought if you sold your crypto and left it in your wallet, you can avoid tax. No, you cannot. You are still, like Brent said, as soon as you hit that sell button and you make a profit, that is a taxable event and you will be taxed on that money. If you don't report it, you're taking a risk. And then you're looking at getting audited and having to pay penalties and fines. So so just know that once you hit that sell button, you've made a profit, it's a taxable event. Final question is, and this is kind of a question more or less from Brent and I that want to put out there. What is the problem with keeping my investment dollars in a savings account?
Going out with a bang.
This is our favorite question that we made ourselves.
You want me to jump first?
Yeah.
First.
Yeah. Now you go first.
Okay. You're not even keeping pace with inflation. Let's start there. And if you are watching this and your money is in a savings account because you believe you're saving for the future, you are losing. And I don't really care who you are or what savings account you have. There are definitely more superior places you can rest your money while it's just waiting for its next duty. So if you have a savings account and you're saving even in 3 to 6 months, because you're supposed to, quote unquote, and this is actually why I stopped being a financial advisor or a licensed financial advisor, because I wouldn't even be able to say this right now because of compliance. If you're saving 3 to 6 months of your funds in a savings account, that's normally standard protocol. And the reason behind that is they say if you're single, you want to have 6 months of savings available in case something happens because there's no secondary income. If you're married, you want to have 3 months of savings on standby in case something happens because the general thought is your spouse will kick in. The other half of the money's coming from your spouse. So you only need 3 months. For me personally, I don't want any money sitting in a savings account. Like I don't want dollars. I don't want $8 sitting in a savings account, not doing anything. Because where we were before, as it related to the stock market in particular, it was what's called T+3. T+3 used to mean it was a trade date plus 3 days before you could even think about getting your money. And even then, that money was just settling and landing in your sweep account. Now, if you place a trade, it's normally like 2 or 3 days before the money can actually be in your bank account or wherever else you need it to be. So there isn't the same argument from my standpoint, besides the fact that the financial planning ecosystem hasn't caught up with technology in regards to the consultation that they give to people, which is why Leon and I even created Investing Education Academy. We wanted to give the narrative and the educational financial matters differently, like to really tell you the truth. And it's a lot of financial advisors, they're restricted by compliance. They just can't tell you everything that you really need to know because it's not compliant. So savings accounts are the worst. And Leon's about to give you a stat, I'm sure. And the reason why I'm not giving it to you, because I'm sure he's going to give you a stat on what happens, how long it's actually going to take your money to double inside of a savings account. But truthfully, if you're saving your money in a savings account, stop it. Go tomorrow to the bank and just ask them, call, search online today, check to see what your interest rate is. Just check to see what your interest rate is. And we have people on this, we have people watching right now. We probably have people listening to our podcast that did over 60% rate of return last year. And that's not something that's going to probably go on forever, but that we are aware of. There are at least like 6 members in Investing Education Academy that did over 60% last year. Confirmed they did over 60%. So to have your money in the savings account is just like, I pray for you.
So. Yeah, and the issue, so the problem with that is that, so the stat Brent was talking about is the stat I love, is that the average savings account rate in this country right now is 0.05%, right? And the amount of time it would take for your money to double at 0.05%, I can't remember the exact number. It was either 1,400 or 1,700 years for your money to double at 0.05%. Now, contrast that with the stock market that on average returns 10% per year. So it's an absolute no-brainer that your money should not be sitting in a savings account. Now, let me change my words. Your investment dollars should not be sitting in a savings account. They should be sitting in the stock market. They should be sitting in real estate. They should be part of a business you're starting. Anything that's going to get you more return that's superior to inflation. Inflation on average, 2 to 3% per year. Since COVID, real inflation has been anywhere from 5 to 10%. So and think about that. Over the last year, if you only earned what the stock market generally returns, you're only meeting inflation. 10% is only meeting inflation on average the last year. And so, like the stat for me right now this year, from January 4th today, my portfolio is up about 55, 60%, right? This year alone. We're only 6 months in. Will it be that at the end of the year? I have no idea. But that's where I'm at right now, which I am thankful for. Now imagine that I'm at I'm at 55 to 60% at 6 months through the year versus having money sitting in an account that's paying 0.05%. It makes absolutely no sense. Even though there's more risk in stocks, that risk is worth
No, it's more risk. It's more risk, honestly, in a savings account because you're almost guaranteed a loss.
Well, you literally are guaranteed loss right now, 0.05%. Right. So in some ways, well, it's
a different kind of risk.
Yeah, it's like degrees of risk. There's higher degree of risk in stocks, but there's almost more of a guaranteed risk in a savings account because you're going to lose buying power every day. So the answer to this question is you should not have your investment dollars in a savings account, especially if you're under like 50,
80. If you're under 80.
if you're anywhere south of 50.
No, 50 is way too.
I know, but I get a little bit of preference to, like, if you're I get people get scared around retirement. I get it. So I can see above 50 going not in a savings account, more into bonds, do the whole 60-40 thing with bond stocks. But again, not in a savings account. But if you're below 50, your money should be full-fledged in the stock market, and remember, 10% per year on average return. Individual stocks do 2, 3, 4 times that much per year. I mean, you're going to get 20, 30, 40% in, tech, in consumer discretionary, in REITs, dividend paying stocks. Like it's just a no-brainer. So we always draw this point home. Please, please, please get your investment dollars out of savings account because you are literally losing money every day based on inflation.
Yeah, and going back to Leon's stat about that 1,600 years, you're talking about 1,600 years for your money to double in a savings account. 1,600 years, possibly, depending on your interest rate, for your money to double based off of this, the average return on investment or in a savings account in the United States of America right now. That's going to be roughly 16 generations of your family. 16 generations. If you 16 generations, really think about 16 generations of your family, and you're still waiting for your money to double. If Leon right now, if he stays on pace of what he's doing, his money's going to double in 12 months. 12 months. If it stays on.
Yeah, if it did.
Let's say he just falls completely off a cliff, and it's not till next year that he hits 72% rate of return. That means that it still only took him 2 years to get to his money doubling, like the percentage he needs to be at to see his money double. It took 2 years maybe in a shaky market.
Right.
And if you're in a savings account, it's going to take you 16 generations. That's just.
Yeah. And so that's why we ended with that question to just drive that point home. Please, 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 if you have your investment dollars in savings accounts, please get it out of that, put it into something else that's going to at least be 2 to 3% per year. Really should be more. But the stock market, like I said, invest, real estate, a business, crypto, whatever. But we gotta get our money out of literally losing money per day when it's sitting inside of a savings account, earning on average 0.05%.
Yeah, and for everybody out there, so we want to thank you for your questions. Everybody on this live, you guys have been great with your questions. And for anybody listening to our podcast and you want to check out Investing Education Academy, you can go to www.ieanow.com. And for anybody on here that's been thinking about joining or has a friend or family member, we are literally doing a 50% off membership drive right now. So that means our base membership is, I think, $8 or $9 a month. And $9 a month we're not doing this again. This is not the infomercial. You won't see this again. We will not do this again. And so if you are looking at our mid level membership, I want to say, I can look it up. It's 50% off too. So it's probably
like 20, it's like 24 or something a month.
Yeah.
Right now.
It's not a lot of money. And then if you're looking at becoming an IEA Panther, Leon just informed me that we are now at about 12 members, and we're closing the group down when we get to 15 members. So that's literally between like 2 and 3 more slots available. Somebody just joined tonight. And when we close, it's $4,000 a year right now. When that group closes down, it's going to be 10 and opens back up. It's going to be at least $10,000 per person to join. And honestly, for us, if nobody ever joins the 10,000 level, we're fine because we invest together and our portfolios are going to be robust, to say the least. And, we're going a little deeper than the average IEA member regarding investing together, educating ourselves together, and sharing what's working and seeing each other's portfolios inside of the IEA platform, IEA Panther platform. And anyone who's inside of the IEA Panther platform automatically gets access to the IEA Crypto Bulls, which is our cryptocurrency group, which is $200 a month. So that's like $2,600 by itself, or $2,400 by itself. So, I mean, you do the math. It's pretty much it's a no-brainer, I would think. But it's on you. We're still going to provide. We're going to show up on Wednesdays, regardless. But we would love to see more people in the membership really taking advantage of the resources in there, and it's going to be a good time. We're only a year old. We just turned a year old, so thank you for all the support. Thank you for checking us out on these lives, and we have our 2 stop picks. We're going to drop it inside of the Facebook group, as we said we're going to start doing. So go over to the Facebook group, and you will see our stop picks for the day in this Investing Education Academy. Search it on Facebook. You'll find our group, join, and you get to see our stop picks. So, Leon, you have anything before we go?
No, that was it. Just get your investment dollars out of a savings account, please.
Yep. Everybody, thank you for being supporters. And, we hope when we take that boat to that island, as many of you all are with us as possible. Have a great day.